It's a few minutes before 8 a.m. on Thursday, June 27. They've been pretty quiet. There was a little bit of movement in the pre-market. They went down maybe 17 points or so, 17 ES points, back up, kind of hovering around, well, currently at 7:56 a.m. They're at 5:45 pretty much. And in 34 minutes or so, there is a GDP data release, data announcement. Might do something, but really there just has not been the volume needed for any signal to materialize. Well, a signal can materialize without volume, but it's really nice to have both. But on all the charts, all the indexes, everything that I look, that I try to find convergences, there isn't anything. So they have today and tomorrow, possibly next week. Kind of looking out long term. I mean, I know I do talk about these long term ideas just because I like to sort of see what the likelihood that the market is going or where they're going in the long term. And it really doesn't have a ton of bearing on what I do intraday at these levels. However, I just like to know it. So I'm sharing it with you. And I'm not saying I'm right. It's just interesting thought exercises. But I was looking farther out and toward the end of July, like say, I think it's the 19th. Let me pull my calendar up here. The weekend of the 19th or weekend of the 26th of July would also be pretty good timing in terms of the weekly chart if they don't do anything this week. But anything can happen. There's not a lot of levels on the board today. Just want to be kind of careful. If they continue to be quiet and go sideways, then so be it. If they move a lot, I don't have a lot of levels on here, and that's on purpose because if they do move, I don't want to get caught in anything. I have more levels, but these are the most important for today. We'll come back to this chart after the market closes, analyze all the trades taken, if any trades were taken at the minis after the market close. I will point out that this 545.55 is just the gap. There are a couple things when you turn on the aftermarket hours and you look at the data and some moving averages and things. Essentially, what's telling me is if they can get above this, they could go higher a little bit. If they stay below, it's just a little bit weaker. It's kind of like a somewhat important area. Trade accordingly and be cautious. We'll see you after the market closes. Thanks. And here we are after 7:30. So this level, this gap left over from yesterday was important. They really never got above it with sustained closes on any significant time frame, and never got below it with any sustained closes on any significant time frame. So it just kind of bounced around it, pretty obvious, but it gave us a trade right off the bat. Someone asked earlier, what's the deal with the 5-cent buffer? Well, this is the level that I went with this morning, 545.55, but as the spiders were coming down, so 945 is up here somewhere, so they could have gone up to this level or they could have come down. So you have orders pending, ready to be triggered. That's what I do. So this is 545.60 at 5 cents, simply just to grab levels in case there's too many front runners that are going to kind of strip the trade away from you within pennies of it hitting the level. I just find that happens sometimes. And I'm okay for them to be out of the money a little bit because there's going to be some liquidity down here. But anyway, so 5 points or 4 points base hit is very possible and doable. I actually got 5. I'll show you the screenshots of that, and really nothing more to show. This is satisfied at this point. I don't want to trade it again because I don't know if it's going to bounce again. That's just the way I like to do it. So let's look at the trades, or at least the screenshots I took of the trades this morning. Didn't have the clock in the setup before when I started recording this, and I was already in the trade. As you can see, I'm kind of out of the money at this point. This corresponds with the level on the SPY chart. I'm got a target for 5 points, and I'll just start playing this. You can see them climb up, and I looked away for a few minutes, and that was when they happened to go right through the level. So I took one last screenshot after they busted through the 5 points and kept going for a little while, and there you go. So that was the level satisfied, the only trade that I took for the day. I'm going to show you one thing. Here's a monthly chart. And so here's the month. We have one more day before the month of June ends effectively. And here's our volume is way down here. And I just dropped a line right on top of it just to sort of see back in time. And here we are back in, I have enough data here for the volume to go back to toward the end of 2000, 2001 or so. And yes, maybe there weren't as many recreational traders trading them, options and whatever else on the SPY. But there's been plenty of very large spikes. What was this? This is 2008. Yeah, there we go. A little recession here. A lot of big spikes in volume throughout time, preceding a big move usually. And now we're way down here. So, you'd have to go back about 20 years before you see his volume as low as it is right now on a sustained basis. I mean, they'd have to do a lot in one day to get this thing to bounce up. And if they did, and this is really unlikely at this point, but anything can happen, I'd want to see a big drop in price for this candle to close, to look a certain way on certain timing, to have a more of a confirmed clue of a trend change and maybe a downturn for a few months or so. That does not have to happen. That could go for a few more weeks or so, but the timing is great on this monthly chart and the weekly chart for that matter. But one more day, we'll see what happens. Over here on the log, pretty straightforward. One level that was hit, playing by the rules. You could have squeezed 4 points out really easily. I got 5, and you can see the profit potentials. And maybe I'll just explain this. So, because one thing I noticed is after today, I bumped this up to 80%. This is the way I measure this is days ending in the green compared to days ending in the red. So, this is data going back to the beginning of January 2022. So 628 days in this log, of which 472 days levels were hit, trades were taken, good or bad or ugly. And over time, these add up. So what you're seeing is, if you're trading just one contract at each of these levels for the past few years, then that will be your average, and that will be your total starting from zero. I mean, like last few weeks or so, you're a couple $1,000s or so. Looks like we're at this point, and we have one more day left, just trading one contract. And you just kind of work. I mean, it might not look like the sexiest strategy there is, but it works and it's conservative and it pays over time. You just trust the levels and let them work, and just don't invent trades. I do invent trades, and maybe some are better than others. The other day was great. Got 20 points or so, more than 20 points, and it was an average of 2 contracts, so a hair over $2,000 for that day, which is not bad for 2 contracts. Anyway, I'm not want to brag about that or anything. But the point is, just look at these numbers here as your reference guide. If you can afford to trade micros, great. Maybe 3 or 4 micros and divide this by 10. There's your likely average. Let's just be more realistic here. Using this tracker, playing by the rules, not taking any type of creative liberties, only 4 points at every level, and then reversing or jumping out under certain circumstances. 3 micros, a tenth of that, over time. Anyway, just to give you an idea, that's what this is. So thanks for watching and subscribing, those of you who are hanging in there. There's been some times where I've kind of bemoaned the fact that, this trading course, which I started developing earlier in the year, I thought it'd be done by March. And, I kind of rushed a few times, but I've stepped back, and honestly, I'm enjoying providing these levels. I'm doing them anyway in the morning because I'm going to trade them. So there's really no skin off my back to do this. And yeah, I want to get this material out so you understand how to identify your own levels and trade them. And if you don't want to do the heavy lifting, then you can just subscribe and I'll provide the levels to you. So they won't be free forever, but I'm enjoying this, and I'm doing this partly because I want you to prove them for yourself. And I have noticed that while I haven't had a ton of subscribers, and a couple have dropped off here and there, I'm not sure. Like I said, it's probably not the most glamorous or sexiest strategy there is, but it's worked for me over the years, and I just want to share it with you guys. So I do appreciate the quality viewers and subscribers and interest that are in this channel, and hopefully in the upcoming course and the subscription. So thank you if you know who you are. And if you think that any of your friends or anyone else who might be interested in this and find some value in it, then please tell them about it. I would like a little bit more interest in this channel if possible, but soon I'll get this thing launched. The website will get kind of a revamp, and there'll be a member side to it. So anyway, we'll come back tomorrow, last day of this week, last day of the month, last day of the quarter, and I don't know. Let's just see what happens. We'll trade each day as we get to them with the levels that we have for the day. Thanks for watching. See you tomorrow.